This is Encik Mundiandi, a resident taxpayer in Malaysia who operates a freelance software consultancy business. Encik Mundiandi submitted his Form B for the year of assessment 2024. In his tax return, he claimed RM40,000 as business travelling and entertainment expenses. However, during a tax audit conducted by the Inland Revenue Board of Malaysia, or IRBM, he was unable to provide supporting documents such as invoice, receipts, and travel logbook to verify these expenses. Since taxpayers are required to keep proper records to support every deduction claim, the IRBM rejected the entire RM40,000 deduction. As a result, his chargeable income increased, which led to additional tax being assessed.
Question A. How can Encik Mundiandi appeal? On the 15th of December 2025, the IRBM issued a Notice of Additional Assessment, also known as Form GA. If Encik Mundiandi believes that the assessment is incorrect or unfair, he has the legal right to appeal under Section 99 of Income Tax Act 1967. To do this, he must complete and submit Form Q to the Director General of Inland Revenue within 30 days from the date the notice was issued. In this case, the deadline for submitting the appeal is the 14th of January 2026. After receiving the appeal, the Director General will review the case and, if necessary, forward it to the Special Commissioners of Income Tax for an independent hearing and decision. Therefore, it is very important for taxpayers to submit their appeals within the prescribed time limit.
Now let's consider a different situation. Suppose Encik Mundiandi was hospitalized and was unable to submit his appeal before the deadline. The Section 100 of Income Tax Act 1967 allows taxpayers to request an extension of time if they have a reasonable excuse. To do this, he must submit Form N to the Director General of Inland Revenue, explain why the appeal was late. He should also attach supporting medical documents such as medical certificate or hospital records. The Director General will then review the application and decide whether to grant the extension. During the tax audit, the IRBM also discovered that Encik Mundiandi intentionally failed to declare in Form B 30,000 ringgit of consultancy income which had been deposited into an offshore bank account. This is considered tax evasion because the income was deliberately hidden to reduce the amount of tax payable.
Next, let's look at the legal implication of Encik Mundiandi's action under Income Tax 1967. First, under Section 113, Subsection 1, Subsection A, submitting an incorrect tax return occurs when a taxpayer omits taxable income or makes an incorrect declaration. In Encik Mundiandi's case, he failed to declare part of his taxable income resulting in an incorrect tax return. The legal consequences include a fine ranging from 1,000 to 10,000 ringgit, a specialty penalty up to 200% of the tax undercharge, and the possibility of further tax audit and investigation. However, because Encik Mundiandi intentionally concealed 30,000 ringgit of consultancy income in an offshore bank account, his action may also constitute willful tax evasion under Section 114, Subsection 1. If the IRBM can prove that he deliberately intended to evade tax, he may face more severe penalties, including a fine of between RM1,000 and RM20,000 ringgit, a special penalty of up 300% of the tax undercharge, imprisonment for up to 3 years, or both a fine and imprisonment.
In conclusion, this case highlights several important lessons for taxpayers. First, always keep proper business records, including invoices, receipts, and to understand their rights, including the appeal process and the option to apply for an extension of time using Form N when there is a valid reason. By maintaining accurate records, meeting deadlines, and complying with the Income Tax Act 1967, taxpayers can avoid unnecessary legal consequences. Thank you.